Very much. Now we start looking at what's happened in the United States. Now last week markets rallied on news of the massive bailout plan by the US government, but that has now hit an impasse as different parties disagree over its exact terms. But in the meantime, oil prices have scored their biggest gain in a single day. That's on concerns that this rescue package could devalue the greenback. That's the currency in which oil is traded.
Oil had its biggest one-day gain in history, a jump of over $16 a barrel. Analysts say the surge was tied to White House attempts to soothe the financial markets. As the tally for the government's numerous bailout breaches $1.6 trillion, analysts say the prospect of that huge debt shakes faith in the U.S. dollar. And in turn, analysts say a weaker dollar is causing investors to pile into commodities as they did earlier this year. Crude oil settled the day near $121 a barrel. Investors also bought heavily into gold, which jumped back above $900 an ounce. Meanwhile, very few details on what will be America's biggest bank bailout ever. The Treasury's historic $700 billion bank rescue plan remains under intense scrutiny as Treasury Secretary Henry Paulson tries to hammer out a deal with lawmakers. President Bush said any delay would hurt Wall Street and Main Street. So what do the movers and shakers in corporate America think? Wilbur Ross is a takeover specialist.
There are certainly a lot of risks involved, but what's unclear is whether they will intentionally overpay, because the spirit of this whole thing is to help these selling institutions.
In an end of an era, the Federal Reserve approved Goldman Sachs' request to turn from an investment bank into a regular bank. Morgan Stanley was also granted permission and said Japan's largest bank was buying as much as a 20% stake.
Well, senior finance officials from key economic powers have promised to do all they can to tackle a credit crisis that's threatening to engulf financial systems across the world. The Group of Seven, that's G7, held a phone conference Monday. They said they welcomed extraordinary steps taken by the United States to stem this crisis. These include, as we just saw in that report, the Treasury Department using up to $700 billion to buy up bad mortgage debt, as well as other toxic assets held by banks and other financial institutions. The Bush administration and Congress are still working on that package, despite current difficulties over the specifics of implementation. Meanwhile, more Chinese banks are reporting their bond holdings in the recently toppled Lehman Brothers. Total debts now to the moribund investment bank amount to $635 million. China Construction Bank has disclosed the highest level of exposure so far, with close to $200 million in bonds issued by Lehman. But CCB is stressing that this is just a small part of its assets and should have little substantial impact on its operations. Xi Tianxin tells us more.
China Construction Bank, the country's second largest commercial lender by assets, said it holds over $191 million in Lehman bonds. Friday's announcement was the biggest exposure reported so far for a Chinese bank to the failed Wall Street house. The figure accounted for less than 1/3 of a percent of CCB's net assets at the end of June. The lender emphasized the collapse of the Lehman Brothers will not dramatically hurt its physical situation. And mid-sized lender China CITIC Bank announced on Monday that it has $76 million in Lehman bonds. The bank said it had not made any provisions for losses related to its Lehman exposure, but it would do so after assessing its risk. China's first private bank, Minsheng Bank, also announced on Monday it does not have any Lehman debt. Other state-owned banks have reported holding Lehman debt, but they said that accounts for only a tiny fraction of their assets. Analysts say the impact of Lehman's failure on Chinese banks has been limited. Xi Tianxin, CCTV.